Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, September 6th, 5:07 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend as of the August 29th O'Neill methodology follow-through day. Check the trend gauge over here, still showing green on representing the action of market leaders. Couple of chinks in the uptrend armor, however. Short term, all five indexes versus their 21-day moving average. We've got four of them with at least one close below. The Dow, mid caps, and small caps now with two closes below after the deterioration yesterday. And as far as the mid caps and small caps go, mild deterioration to the downside. But the problem is the S&P 500 closed uh, just below, but still below the 21-day moving average and the 50-day moving average today, as we saw some selling hit the street. Dow, mid cap, small caps also with a second close below the 50-day. Once we get at least another close on the S&P below these short-term and medium-term moving averages, these arrows will no longer be green. And the NASDAQ 100 is showing relative strength as it's the only one of the indexes that is above all three of the time frame signal moving averages that we use. All the major indexes are above their long-term 200-day moving average. And I say it all the time, the market does not get into serious trouble unless the S&P 500 breaks below its 200-day moving average. That's where all bear markets, and I don't mean some, I mean all bear markets occur after the 200-day moving average is breached. Until then, playing it light and on a stock by stock basis is the way we do things here at Revere. So what happened today? Opened with a small gap down 0.2%, but we formed a little bit of a cup. Looked like we wanted to go green early, but then at 10 o'clock, some ISM services data hit the tape and stocks sold off after that. This was strong economic data. And the Fed's not looking for strong economic data. They're looking for they're wanting to stop raising interest rates, and in order to do that, they need to see the economy cooling off, and they need to see um, in employment not as strong as it is. And anytime you get a check mark either in the big plus or the big negative column, that carries over to expectations of what the Fed is going to do. And rising rates are just a major drag on the economy. So when we got some weak data last week, we got a follow-through day. Now today at 10 o'clock Eastern time, we got some strong data, and that resulted in the market going down. So we're very tied to economic headlines and also interest rates and the strength of the dollar. Here's the bottom line. RG8, this is our 8 growth ETF composite, hit hard yesterday, but not today, only down 0.08%. And this is indicative of leading stocks not really being hit hard at all today. S&P 500 was down over 1% at one time, paired it into the close down 0.7%. NASDAQ 100 down 0.88%, Dow down 0.6, mid caps down 0.3, Russell down 0.3, Global 60/40 down 0.36%. This was mostly all stocks. Bonds were flat-ish today on the broad area, on the broad sense. Actually, long-term rates were lower, 10-year, 5-year, 2-year, all higher. In-house GROTECTION, some of the very same names that gave us alpha yesterday, gave us negative alpha today, down 0.92%. We'll take a look at those charts and some other charts of interest. We're going to hit the charts of all the Big-7 and also the RG8 today, as well as some shots from the portfolio. We did make one buy today and one sell. So here's the S&P 500. Here's the follow-through day on the 29th. No weakness after that, but consolidation with an upward bias. Then yesterday, A mild down day today, pretty heavy down day, but we closed well off the lows. We closed, and volume wasn't significantly heavier. Actually, let me double check volume on the indexes. We'll go to the Market Smith homepage and update it. This is always here. NASDAQ and NYSE volume less than yesterday's volume. So, although the numbers were more to the bad side, volume was not. So let's take a look at this on a 5-minute chart on the S&P, and we'll see what I'm talking about. So here's the move down. Here's the little cup. 10 o'clock on the nose. Data comes out. Harsh selling all the way up till 1 o'clock Eastern time. Undercut some key levels in there, but you reclaim them. It's an undercut and reclaim, and that's good. And that included the 44.58 area here, which was, if we look at a 30-minute chart, this was a key level back here. This was the actual gap up of the NVIDIA earnings day before we sold off hard on that day. That was a 4-day move off the low. Day 5, we reversed. We had a big volatile day yesterday. This was Fed 8:25. This was the Fed minutes coming out. We closed positive on that day, and then we tried this breakout. 8:29 was the follow through day, and we pulled back today right to this below this 44.50ish area. And if you look to the left, you can see this was key. This was this 44.58 ish was a key level going over here. You can see all of this consolidation over here. This stands out 44.58. We held it on the first test. We undercut it on the second test, but reclaimed it right away. So this 44.58, fairly key level. We held it. And right above there is 44.65, 45.66, and then 45. We'll check the numbers when we get exactly on them to the daily chart. But these intraday attempts to rally here, here, and here all ran into this 44.65 area. That's the 21-day moving average. We got slightly above it the last 5 minutes and then faded into the close. But the bottom line is, and don't think of these as just a complete line in the sand. This is more of a range, plus or minus. You got to give it a little bit of room to play around these moving averages. But bottom line is we closed basically just a tick below, actually just a tick above the 21-day moving average, and just 0.2% below the 50-day moving average, also 0.2% below the 80 MA. So there's a big confluence of moving averages here. I mentioned yesterday that my expectation would be that they would hold on a pullback. We did undercut, tried to rally back into them, and it's showing a little bit of resistance. It's important to see what tomorrow's action brings. We certainly don't want to break below today's lows. Ideally for bulls, we get back above today's highs and these 3 moving averages. This looks a little better if you go to the NASDAQ 100. Remember, the NASDAQ 100 has been showing relative strength over the prior 2 weeks. It undercut and reclaimed the 8 EMA, didn't get to the 50 and the 21-day moving average. So for now, although the Big-7 were very clearly a drag on the market today, yesterday they kept the market from looking worse than it actually was from a breadth standpoint. So bottom line is it's holding the moving averages. We're right on the moving averages on the S&P 500, and the Big 8 or the Big-7 have a big impact on that. That's why we're going to go through those charts today. Let's go to the Dow now, the third of the big cap indexes, another lower low, 2 clear closes below those 3 moving averages. Dow at the mercy of some of those big high price stocks. It's been showing relative weakness for almost 3 weeks. Mid caps, positive early, but ran into the 21-day moving average and faded the rest of the day. Oils helped out mid caps and small caps early in the day. Then they sold off a little bit before coming back, but also you can see running into the declining 21 on small caps too. So what we need to see a turnaround is for mid caps and small caps to get back above that 21, give that 50-day moving average around the 190, another challenge, and this is also a big anchored VWAP from all-time high level right around this 50-day moving average at 190 level. So those are the 5 major indexes. Next up is the VIX. VIX spiked early, came back as the markets gained a little bit of their losses back into the close. So it hit the declining 21 and failed. Also got above the 15 level and failed. This is good action. It's what we want to see. As far as failing at this 15 level and the declining 21, but we are oversold on the VIX. So you gotta, it's all of a weight of the evidence thing. There's always positive, there's always negative. Uh, and also remember that these are secondary indicators, but price and volume on the indexes, as well as leading stocks, is what is the primary focus and what we make the decisions on. This doesn't help. Dollar gapped up yesterday and held it. Didn't give back any of that today. Stronger dollar, bad for stocks. And that's what we saw. If you look at a 5-minute chart, dollar was coming off, big spike up in the dollar right at 10 o'clock when that ISM data hit the tape. Let's flip over to precious metals. How did they do today? Down 0.45%. So kind of failing that little breakout level from last week. Gold stocks, yikes, making 5 days down now since running into the declining 50-day moving average, and now 2 closes below the declining 21. Silver had that big move up, filled that gap completely now after 5 straight down days. And notice that these 5 straight down days coincide with big strength in the dollar. You just don't have both when the correlation sticks. Sometimes it's not as strong as other times, but it's one of the pretty consistent um, inverse correlations. Let's flip the bonds now. Longer end was interest rates dropped today. Here's the broad bond index. Here's TLT. This was up slightly on the day, which means you should see the TYX, the 30-year down, and that is what we saw. On the other hand, TNX, the 10-year yield was up on the day. So we undercut but reclaimed this 21-day moving average, and we've made 2 higher highs too. Also, this increase in interest rates has coincided with the weakness in the market over the last 2-3 days also. Let's follow up with one more chart. Bitcoin. Bitcoin got a little bit of a pop today on some kind of a tax ruling, but just trading in a tight range after this false move up on the 29th, which was also the follow-through day. So it's given up all of those gains. That's our inter-asset correlation. Let's go to the tail of the tape. Some deterioration in the on the TA of stochastics, the RGA, NASI, dollar, and interest rates. Bear case threatening to take the baton from the bull case with our first close below the 21 on the S&P 500 today. There's the ISM services data that I mentioned. 1 day down, 1 day below the ADMA, basically right on the 21 EMA. From a sector standpoint, only oil services and utilities were green. This was basically a weak bounce on home builders after a huge day down yesterday. 10 of 11 sectors down, and also hard hit were regional banks. In the portfolio, with the move below the 50 and the 21, we trimmed some of our SPXL. And keeping an eye on the leaders and looking for low risk entry points, we bought VRT today. So our overall beta declined slightly. Bottom line on the day, all Big-7 down, 10 of 11 sectors down. S&P closes just below its 21 and 50-day moving average. NASDAQ 100 is holding, and leaders, for the most part, held up better also. When we look at the RG8, you'll see that. Let's look at the chart of VRT. And one of the ways to get into extended stocks is to try to be patient and wait for a 60-minute stochastic cross up from oversold. We got it back here on a pullback. on the 18th. We got it again today. We took a 2% position in BRT as a starter. Here's was the 18th. This would have been the first chance to get into it. Undercut reclaim of the 8. Undercut and close basically right on, slightly above the 80 MA today. So when you see the two of them coincide, it gives you a little bit of confidence, and also the distance between VRT and the 21-day moving average. Even if we lose, well, the ATR on this is about 4.5%. We're 6.7% above the 21-day moving average. So even if we get down to the 21 and fail, that'll still be within our small tolerance for a starter position of 0.1 to 0.2 tenths of a percent to the overall portfolio. So BRT, that's our entry. Let's take a look at what drug us down today. NVIDIA, but it held the 21 day. Tesla, week early, gathered some strength as the day went along. It's wedged between the 21 and the 50-day moving average. So I'll be curious to see who's going to win this tug of war. And the result of that tug of war may either be us adding to our position or cutting our position. NRGU started strong, faded, a little bit of a comeback, normal action relative to the recent strength that we've seen here. And Uber, our fourth individual ticker that we own, normal pullback 3 days, now lighter volume right into the 21-day moving average. So let's look at the big 8. And I'll just go in order here. Apple, ugly day today. There was some news that the Chinese Communist Party is forbidding Apple products from being used in government, anything related to government work. I don't know if that was a rumor or if that's fact, but Apple had an ugly day today on above average volume, and gave up basically a week and a half of gains, closed barely below the 21, broke the 50-day moving average. We have to see if continued weakness comes out of this, because obviously this is going to have a huge impact on the overall indexes, with it being the big size that it is. Next up, Microsoft, hanging right on the 50-day moving average, tightening up above the 21-day. Next up, let's look at Google. Good chart here, pulled back, held the 8. Pulled back, held the 8 EMA today. Let's see, let's go next to Amazon. On 1.4%, sitting right on the 21. It bounced on the 50-day. Again, remember, this had a really good reaction to earnings, but it filled the gap, pulled back to the 50-day, and bounced there. This 140 level is acting as resistance. And we showed NVIDIA and Tesla. Meta is number 7. And Meta in tight action right around the 3 moving averages, all tight together there, the 8, the 21, and the 50, right around that 300 level. So again, a big tug of war going on there also. So that's the Big-7. They dominate the NASDAQ 100. They dominate the S&P 500. Let's go to the RG8 now. I want to point out a couple of things. Keep an eye on the stochastic of all 8 of these. You can see we got near overbought and hooked lower. We haven't crossed the moving average yet. So some strength tomorrow, and we won't do the moving average cross. It's just historically, once you do the moving average cross, it's more likely that that trend is going to follow. But we did break the 50-day, 2 closes below the 21, barely below the 21. This does not look good. It was ugly yesterday, not so bad today, as we finished well off the lows here. Next up is after IWO. IWO is the growth half of the Russell 2000. There's another growth index, the S&P 600, or another index, small cap index, is the S&P 600. The growth half of that is SLYG. This is the second. Again, 2 days down, ugly, lower close, but only down by 0.1% below both moving averages, giving back quite a bit of that run that we had over the prior 7 days. Next up is MDYG. This is the growth half of the S&P 400, mid cap 400, MDYG, same situation, 2 closes below, did hit the stochastic cross below here, or just barely going to do it. But strength tomorrow will hook that back up, and the cross won't happen. So we need some buyers to come in on these types of names tomorrow in order to salvage this downtrend. Next up, and this is going to be a positive one because this represents leading stocks, FFTY. This is the IBD 50 ETF, and note it hasn't crossed down. Uh, Relative strength of leaders over the last week and a half is my takeaway from this. Yes, we're below the 50-day moving average as leaders came off hard during this late July and into mid-August time frame, but certainly showing some relative strength here off the bottom, holding the 21 below the 50-day moving average. Stochastic has not hooked down yet. I give this a little bit of extra weight because it's focused on leading stocks. QQQJ, this is the mid cap NASDAQ 100, has hooked down, hasn't crossed, closed right on the 21 below the 50-day moving average. Next up, PDP. This is a Dorsey Wright Momentum ETF. It has hooked down, but it's holding the 21 and the 50-day moving average. This also showed relative strength over the prior 2 weeks. Next up is SPHB. This is the high beta big cap S&P indexed under the 21, held the 50-day moving average. We've hooked down on the stow, but not crossed over. And ARK-K, despite the big sell-off, has had 2 days of relative strength and has not closed lower. So we've got two indexes that show a risk on for growth appetite outperforming. To me, that carries a little bit more weight than the other 6 that have had the stochastic hook down, but we go by the gross average of the 8 when we calculate it. And then we look to the action of the individual leaders and they're kind of holding up okay. There've only been 2 that have broken below their 21 on my 21 over 21 list. The first one, BG. Stochastic hook down, hard break below. This is an agricultural operations. Break below the 21, and AAOI break below the 21. Very volatile stock. So the only 2 of my 21 over 21 have indeed broken their 21. So that tells me leaders are holding up okay during this pullback. And it's just a matter of putting all the pieces together, weighing the evidence and drawing the conclusion. The conclusion right now is while we don't like the pullback, leading stocks are holding up okay. The NASDAQ is holding up better than the other 4 indexes, and leading stocks are holding up better than all of the indexes in aggregate. So a little bit of a mixed bag. It's never clear cut, and when something does become clear cut in the market, that means that everybody has moved to one side of the boat, and you're about to tip back the other way. That goes for being extremely oversold or extremely overbought. And with that, we're going to wrap it. As always, like to hear from you. If you're listening on YouTube, please like and subscribe. That helps us in the algorithms. And if you have any questions, I do respond to any of the comments on YouTube, every single one. If you want to reach out to me directly, email is don@revereasset.com. If you want to become a client, dan@revereasset.com. My partner, Dan Stewart. Phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We had been in growth mode. That's being challenged by the recent action of the indexes, while leaders are holding up for the most part okay. So we're weighing the evidence, got our stops in place as always, and we'll see what cards come out of the market deck tomorrow. And with that, I'm going to wrap up the video for Wednesday, September 6th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.